what's going on, everybody? Monday, June 28th. I hope you had a nice weekend. It's hot here in New York City, 95 degrees. I'm loving it. All right, new high in the NASDAQ today, new high in the S&P. The Dow was down. I guess some of this reflation trade stuff starting to come into question. Again, I think, everyone who piled into this, like when it was a really hot theme, what was that, back in May? And I think I talked about it at that time. I was like, hey man, pump the brakes a little bit. Pump the brakes a little bit. Like, with yields shooting up, bond yields shooting up, and everybody was screaming about lumber. You see lumber, man, $700 now. That's way down. What would it hit a peak, like $1,800 or something like that? So it could be too now on the downside as this stuff starts to come into question and people are, bailing out of these stocks. It sets up a good buying opportunity. Look, let me mention too, I sent out the new edition of MMT Trader. So if you want that, go to my website, pitbulleconomics.com, and sign up for a 30-day free trial. Fiscal flows, very interesting because it's kind of hard to make a definitive determination right now. A couple of things going on. The daily flows, and I talked about this last week, the daily flows look like they're slowing down a little bit. A little bit. I don't think anything very consequential. The deficit as of Friday, June 25th, hit a new high for the fiscal year at let me get this right. Was like 2.266 trillion, something like that. Anyway, it was a new high for the fiscal year, so that's good. Remember what I told you. When you hear me say deficit, what do you replace that with? What term, what phrase do you replace that with? Net transfers. Okay, so when the deficit's going up, then by definition, the net transfers from the government to the non-government to the economy, if you want to call it that, that's going up. That's good. So that's a new high for the fiscal year where it looked like it was kind of stabilizing a little bit. However, when you compare it to where the deficit was last year, we're now down 103 billion this year versus last year. So there's no question about it that the deficit this year is shrinking relative to where the deficit was last year. And I raised that as a concern last week, or maybe even the week before, when I said, look, stock market, the S&P's at what, 4,200, almost 4,300. Let's call it 4,200 now. The deficit is 100 billion lower than where we were at this time last year. And this time last year, the S&P was at 3,200. Okay? Like 33% lower. So it's something to think about. Now, for me, still, I have to say that it is those daily leading flows. That's the key thing. And as long as the deficit is going up, all right, now it may be going down relative to last year, but, look, that's understandable because last year, we were in the midst of the pandemic. Everything got shut down. It was the massive fiscal response that ramped up very, very quickly. So naturally, you're going to see that differential shrink. So I'm still focused on those leading flows, and I think they're still positive. But if I see those start to slow down or decelerate further, and I think this week we can have a much better handle on this. All right. I mean, we're 3 weeks going into 4 weeks on these unemployment cuts. By the way, there was a story out today about how, the experiment is over. The cuts in unemployment are doing their job. Everybody's going back to work, which is fine. And, I never said that was not going to happen. what I said was, and the article went on to say, you know, the labor market is normalizing. Well, the question is normalizing for who? All right? It's definitely normalizing for businesses because, you know, if they're getting workers back, if indeed this data is correct and the red states are seeing a decline in unemployment claims, and we assume that means people are going back to work or taking jobs that they otherwise didn't want to take while they were on the unemployment benefits. Yeah, it's good for businesses, but again, you know, in the aggregate, you don't have like a total win or a total loss either way. It's just a redistribution of income. Now the income flows back to the producers or the businesses, away from the workers. Before it was with the workers and away from the businesses. So I mean, to say the labor market is normalizing, that's like kind of when Yellen said, hey, higher interest rates will be great for the economy, for the nation, she said. Well, it doesn't work that way. Somebody wins and somebody loses. It's always like that. The same thing with inflation, like I said before. With inflation, somebody wins, somebody loses. Producers win, consumers lose. Same thing with debt, okay? Somebody wins, somebody loses. For every liability, there's an asset. For every debit, there's a credit. So, I mean, you know, you gotta be, what? You gotta be objective in this stuff when you think about it. Otherwise, it'll send you on a path which is just misleading and false. You know? I mean, I saw the one guy, that Winklevoss dude, Tyler Winklevoss, whatever his name is, the Bitcoin dude. He was the guy, you know, the two twin brothers who got rich off of Facebook. Supposedly Zuckerberg stole the idea or whatever. You know, he's tweeting today that, thanks, Jerome Powell. Because of you, so many people have gotten into Bitcoin. Well, if that's the rationale behind people going into Bitcoin, then that's the wrong rationale, Tyler. I'm sorry to tell you. Because again, and this is, you know, I come back around to this conversation nearly every time I make a video. This idea that, you know, the Fed is print money. They're printing money. When Fed quantitative easing and these monetary operations that the Fed is engaged in, it's just shuffling assets around in the economy. And I did make one qualification on that, where I said when the Fed now pays interest on reserves, which formerly was an activity that the federal government did, the Treasury did, but then Bernanke in 2008 said, oh, can we please do it? Can we please do it? When the Fed pays interest on reserves, that is print money. But that is minute in, you know, the scale of the Fed's monetary operations, or minute in the scale of the Fed's balance sheet, all right? That's the only one instance where you can accurately say the Fed is printing money. Otherwise, it's a loan or it's a reshuffling of assets. I happen to think, and I think you know what my view is on Bitcoin and these cryptos, because I've talked about it many, many times, is that I really think they are an outgrowth of the desire of the rest of the world, or the world, to seek an alternative to the dollar-based global financial system, because the United States has weaponized it, all right? Through sanctions, through intimidation, through blocking nations or entities from using it for transaction and clearing and settlement and all that stuff. So it's just a natural outgrowth when you see like a new system emerge, like you do with the cryptos. I mean, for me, if Tyler Winklevoss, or whatever the hell his name is, said, you know, that's the rationale, I mean, I'm 100% on board, and I would say, hey, bravo, dude, you got it right. That's the real reason it's happening. But to say, hey, thank you, Jerome Powell, now everybody's piling into Bitcoin, well, if that is the reason, they're going to be disappointed. All right? Anyway, so that's what's up. All right? We got to keep an eye on these flows, the leading flows. Very, very important. Again, I mean, you get this stuff off the daily treasury statement every single day. If you know how to, break that down, and it's very simple. I have a course on that, understanding the daily treasury statement. It's on my website. So yeah, that's it for today. Things looking good so far. And we'll keep watching it. So for now, that's it. Don't forget, go to my website, sign up for 30-day free trial of MMT Trader. If you like this video, please click like and subscribe. Thanks very much. Bye.